Well, good afternoon. My name is Chuck Evans. We'll get started with the webinar in a few minutes. We're going to wait to see and let some other people sign on. Usually it takes a couple minutes. So stay tuned, folks. Okay, we're going to go ahead and get started. My name is Chuck Evans with Lenders Cooperative. Welcome to our 30 at Noon webinar series. The purpose of these webinars are not to replace the excellent training that NADCO or NAGLE performs, or even the SBA on-demand webinars. What we like to do is to bring you industry subject matter experts that can share some best practices, some inside information on how to manage your SBA program. Today, I'm so happy that we have Lyndsay Rowland, my friend from Starfield Smith. Lyndsay, welcome.
Hi, thanks for having me.
Tell me something, Lyndsay. I know Starfield Smith handles all things SBA, but I know historically in the past, most of your work was done in closings, but that mix has shifted, hasn't it?
It has shifted. So we were primarily closings, but over the last couple of years with everything going on with the SBA and the number of defaults and other things that are happening, we've shifted and we're almost 50-50 at this point in time. So lots of
Amazing.
different areas to work in.
Emerging risk is a buzzword right now.
Yes, for
And
sure.
my two associates, Rachel Hunsinger, who manages our servicing and liquidation team. Welcome, Rachel. How are you?
Good. How are you,
And we've
Chuck?
brought on some new clients, haven't we? Just for service, just for liquidation.
Just for liquidations, yeah.
Yep.
And you know, I'm thrilled to be partnering with Lyndsay because I've actually worked with Starfield and Smith for a number of years on the closing side, and then with the shift on the liquidations, it's been great working with she and the firm to do that and partner with them when we have a need. So thrilled to be here.
Absolutely. And last but not least, David Tinsley, who manages our LSP team in Alabama. Welcome, David. How are you?
I'm doing great. Thank you for
That's good.
having me.
And David, why don't you tell us a little bit we'll get the commercials out of the way. We've talked about Starfield and Smith. Tell us a little bit about Lenders Cooperative, and then we'll move on to the topic at hand.
Yeah, you bet. So Lenders Cooperative is it's an organization sort of dedicated to partnering with lenders of all sizes here, especially as it pertains to small business lending. And so we've got some very much industry-leading technology that will assist lenders with that, as well as a significant amount of subject matter expertise and experienced bankers that work with us that can help with these professional services needs that can be outsourced so that we can help you really grow your lending programs as well.
That's great. And we have next month, we're going to have our own Stephen Hayes, who was one of the founders of Lumos Data Analytics on July 24th. He'll be talking about developing a small balance risk profile. You know, we've signed up a number of SBLCs that are, you know, one of the challenges is expanding the credit box. And so we have some really good information next month. So this is exciting. So Lyndsay, I'm going to turn it over to you if you can.
Hey, Chuck, can I drop one more, some housekeeping
Absolutely.
real quick? Yeah,
please.
and sorry, Lyndsay, to interrupt, but yeah, so I would say to everybody here, how often do you get a chance to throw questions right at someone from Starfield like this? And so I would say, please utilize the Q&A that's available here. I'll be monitoring them throughout this, and I'll drop in the question, and we'll make sure we're addressing it. So please don't hesitate, because otherwise I'll have to make up questions, and that may not be as fun. So take it away, Lyndsay.
Sure.
And the other good part is she's not going to send us a bill
Yeah.
That you know of, maybe.
that we know of. That's right. Thanks. Go ahead,
Um,
Lyndsay.
Yeah, sure. So I actually think that this was a timely topic because we're definitely seeing more defaults. And I also think that, there are some borrowers who are very proactive and they'll let you know that they're getting ready to go into default. They'll let you know that they're behind with their landlord. But then we have an equal number of borrowers who just say, by the way, I turned over the keys to the landlord and I'm done, right? So I think landlord waivers are definitely becoming a thing that I deal with day to day in my practice. So that's why I think it's so important to talk about them. So let's, get into it. And you guys, of course, can stop me or ask me questions along the way
Awesome.
on anything that comes up. Okay, so I think the one thing that we've seen that's consistently been in the SOP is the fact that the SBA does require lenders to get landlord waivers, right? Especially when your borrower is in a leased location. But the part that I want to focus on, or not even focus on, just mention is the second provision that I put in here. I cut this right from the current SOP, the 5010-8. But it says that if the SBA lender is unable to obtain the assignment of lease or landlord's waiver for both 7A and 504 loans, the lease term, including renewal options exercisable only by the borrower, must equal or exceed the term of the loan. Additionally, the SBA lender must document in its file its attempt to obtain the assignment and the landlord's waiver and the reason for not obtaining them. And I'm just mentioning this because I see quite a few times where a lender just says, I tried, I couldn't get it, end of story, but that can create some problems after the fact. So let's talk about what that's gonna be. Okay, so first, I want to get into the requirements that we want to see in a landlord waiver, right? Now, the things that you primarily want to see in a landlord waiver is the landlord subordinating any interest that they have in any of the collateral that might be in the lease location to the lender's interests, right? So you want the lender to have a priority over the landlord's claims. Super important. Also, most of the time, we definitely want to have notice of any default, right? Because without notice that the borrower's defaulted on the lease, we don't know that there's anything we should be doing. Although a lot of times, right, if they're defaulting on the lease, they're also probably defaulting on the loan. In some cases, you may want the opportunity to cure a default. We'll get into, some of the considerations that will go into making that decision. And then you also definitely need access to the premises to inspect, appraise, and or remove the collateral. And I'm going to get into specifics on those particular terms. I'm going to give you an example towards the end of this of why all three are super important. Okay, so why do we care? And this goes back to, I see lenders waiving a landlord requirement, or a landlord waiver requirement. And is it really that big of a deal? It can be a super big deal. So I want to briefly talk about the steps in a liquidation, and then the steps in the liquidation will marry with the terms in the landlord waiver, and we'll talk about why they're so important. Any questions so far?
Just one, Lyndsay. You've mentioned both 504 lenders and 7A lenders, but for the most part, the infractions are coming from the 7A side of the house, would you say?
Yeah. Yes, definitely to
Because
clarify.
they're using designated counsel on the 504 side, so that the chances of not doing that here is probably slim, I would think. Yeah.
Yes.
Okay.
So the day-to-day, most of the day-to-day work that I'm doing are with 7A loans and landlords with 7A borrowers in default. Yeah, that's a good thing.
Okay. Cool.
Okay, so to quickly run through our process whenever a loan starts going into default, right? We usually get a notice that the borrower is going to go into default, or they just stop paying. And that kind of kicks us into gear onto what to do next. So one of the first things we're going to do is look at our file, look and see, is our borrower leasing from a landlord? And the first thing we want to do is then check and see if we have a landlord waiver and what the landlord waiver says. And this is so important because, the SOP requires a borrower, or requires the lender, to do a site inspection and to get an appraisal of the business assets. which can take time, right? So we definitely want to know what kind of time we're working with in the landlord waiver. That's going to dictate how quickly we're pushing our appraiser to get into the space or get our site inspector into the space, right? So that's super, super important because we don't know what we're going to do with the collateral until we have that information, right? If the collateral is not worth a lot, you're not going to want to spend the time and the money to liquidate it. But if it is worth a little bit, then we probably need to take steps to liquidate or make other arrangements with the landlord. So I think, and you guys might disagree, but I don't know that there's a lot we can do until we have those reports back to kind of make that decision, which is why we need to move so quickly and get access to that space right away.
Lyndsay, can I ask a question about that?
Sure. Yeah.
One of the things that I've seen a lot is, especially with lenders with national footprints, their landlords are often not local, right?
Yeah.
They're not the person that you shake your hand with anymore and you kind of have coffee with. They could be in a different state, they could be across the country. I've had challenges in my past where a borrower maybe is not defaulted on the lease because they believe that as long as they continue to pay their landlord, they can continue to operate that business, and they've chosen to default with the lender instead.
Mhm.
And where the landlord is not local, despite having a good lease, despite having a good landlord waiver, they have relied upon that borrower to provide access. And we've had the door slammed in our face before, from a lender perspective, by the tenant saying, you can't get in, you can't access the space. And the landlord has kind of gone a little bit MIA, or they reach back out and say, hey, yeah, I'm out of the country, or I'm across the country. You're gonna have to figure it out. What do you do in that situation?
Yeah. So if you are having a landlord who won't provide access because the borrower is still technically in possession of the space, right? The option really is to go and file a lawsuit against the borrower. So if you can't get cooperative access and the borrower is still in possession of the space, that's usually where you would have to get local counsel and probably file a replevin action. But in that particular case, I might want to take the equipment list from closing or receipts and other invoices from closing and get a quick desktop appraisal if I'm not able to get the access to kind of make sure that that makes sense, right? Because again, a lot of this is going to be dictated by what type of equipment or what you have in the space. Yeah. So this little slide here just is about the landlords, right? So I find in these particular situations where we have a default on a lease or we have a defaulted loan, that the landlord either can be our best friend and they're super cooperative, or they're our worst nightmare and we can't get anything done. So sometimes we want to fall somewhere in the middle. More times than not, we definitely, I see that we have landlords that are definitely helpful in certain circumstances, right? But the landlords that are difficult are very, very difficult in my experience. So it's just something to keep in mind. So the more we can get into the contract, the better off we are.
Hey, Lyndsay, it may be
Sure.
better to ask this question later, but you tell me that, how do you recommend, so when lenders are working with an applicant, you recommend, or should this be part of the negotiating with the landlord in the first place? Like, so if they haven't actually signed for the lease space yet, this should go as part of the negotiating of the leased space?
I would suggest yes, depending on your equipment, right? And we're going to get into that. But I
Okay.
do think if you can get ahead of it, you're much better off. So I would suggest yes, that's probably makes sense. Okay. So in the context of landlords that are good, right? Landlords that are easier to work with, usually I find that these might be landlords. I'm not going to say always, but to Rachel's point, right? You have some landlords that are like national large landlords. You have other landlords that are like a one-off individual who happens to own like this particular shopping center or this particular building, right? So I find that usually, not always, if it's a smaller landlord or even a national landlord, right? A national landlord probably has a procedure in place and they just start running through the procedure, right? So they can sometimes be challenging about the deadlines and things like that, but they usually kind of know what to do and they kind of just work through it. I've also seen situations where it's like a one-off landlord, a smaller individual who just owns like one particular building, who is relatively helpful, right? And they can be like, hey, we're working together. That's always nice. So landlords that have a similar interest to the lender definitely fall into the easier to deal with category, right? Because some landlords want you to leave the equipment because they want to try to re-let the space with the equipment in it, and then your equipment will be part of a sale or part of the transaction in some way. So those landlords are easier to work with. And they also can sometimes provide more time, right? If their interests are aligned with you, because we know that there's not as many businesses operating in person, right? Depends on the type of industry, but office space, there's definitely some out there. So these landlords definitely want to get their space re-rented sooner rather than later. So if they see some benefit to having your equipment in there, having it stay as part of the leased location, they can be much easier to deal with. To the contrary though, right? If you have a landlord who definitely has someone already lined up for the space, knows they want somebody else in the space, knows that they want the stuff out as quickly as possible, has no interest in the stuff, depending on what type of business it is, then those landlords tend to be a little bit more difficult to deal with because they have an interest in getting the stuff out as soon as possible. They don't necessarily have an interest in kind of working this out with the lender. They want the lender to get the stuff out, get the stuff sold, so they can kind of do what they need to do with the property. So while I'm thinking about it, one of the things that I definitely like to do right away is when I have a borrower that goes into default, I want to call the landlord, right? So usually I might not have a phone number for the landlord. I'll go to the landlord waiver. We'll get a letter to the landlord saying our loan's in default, or we got your notice that the lease is in default. We want to talk about it. And I want to try to get somebody from the landlord on the phone as quickly as possible. That first call with the landlord is going to really give me a lot of insight into whether they're going to help me out or they're going to not help me out, right? I'm going to get a lot of perspective from that very first call. So I'd like to take a few minutes to kind of talk about what I would like, or what I counsel clients to try to negotiate in their landlord waivers, the things that I think are the most helpful, right? So one of the first conversations I have with the lender when they're talking about doing some type of template for a landlord waiver, or if they're negotiating with the landlord on a particular deal, is what type of collateral are we talking about, right? Because that makes all of the difference in the world. If we're talking about some office equipment, is it going to appraise for a lot? Most likely not in a liquidation situation. Do we need a ton of time to figure that out? Probably not as much time, right? If we're dealing with heavy machinery, like I had a marble company that we had to liquidate where they had massive machines that were bolted to the ground in the lease location, tons of like huge slabs of marble. That was not going to be an easy liquidation. It wasn't going to be a fast liquidation. In that particular case, we want as much time as we can possibly get, right? So that is one of the things I want to look at first. What is the type of equipment? That's going to dictate all of my steps going forward. Do you guys have any thoughts, comments on that? Okay.
Not for me.
So then the next thing that I want to look at is, what's our access worth? And what I mean is this. So a lot of times whenever lenders are negotiating landlord waivers, you'll see provisions where in some cases the landlord will have per diem rent kicking in immediately, right? Like as soon as we send you the notice, you have 10 days to access the property. And then after that, per diem rent has to start. Okay, so that's not unusual. And sometimes there's nothing you can do about that. But what I would like to see as an attorney who's coming into a default situation is somewhere more in the range of 30 to 60 days without having to pay rent. That would be ideal, right? Because that gives us time to get in, do our inspections and our appraisals, decide what we want to do, and then either get the collateral out or make other arrangements. But the more time we can get, like, the better off we are. Now, there are some cases where there's just nothing we can do. The landlord's not going to negotiate something more, but the more time that we can get without paying rent, the better, right? Because then once we hit that date, if you want to keep the equipment there, we've got to start paying the landlord per diem rent. And that doesn't get challenging. It's an expense that you have to take into consideration.
How often do you see that, Lyndsay?
So most landlord waivers that I deal with have per diem rent kicking in at some point in time. But sometimes it's after the 10 days, sometimes it's after 30 days. So I would rather see it after 30 than after 10. But we kind of deal with it whatever way we have to, depending on the stuff that's in the location.
Does it tend to fall more with, like, if it's one of these larger national landlord scenarios, does it tend to fall more toward they're going to be a lot more aggressive in how quickly that kicks in versus someone that you're able to actually get on the phone and speak to?
So I don't know that I have a specific answer for that, right? Because there's
Okay.
some of these larger outfits I've dealt with that are fairly reasonable, and they're like, hey, we're going to work with you, we're going to give you this time, because they've run through this process, and they have, attorneys that have consulted with them, and they know what they're doing. There's sometimes where it's like a one-off individual or like an investor group that owns like a property or two that are super difficult, right? So you just really never know. And that particular group I'm thinking of that's super difficult also has a very difficult attorney. So who knows? Is it the attorney? Is it, it's always the lawyer's fault.
Yeah,
so
it's always
who
the
knows?
They're definitely not
Fight
working
for the
with
client.
Starfield and Smith.
Yeah, it's
No.
always the attorney's fault. So, okay. So then the other provision that I think is important is to find out how much time or how much notice you can get, right, on the default. So there's some cases where I'll see that a landlord's going to provide notice and they need you guys to do something within 10 days from the date of the notice. Anytime that we can get that's over or longer than 10 days is great, right? The more time that we can get, the better off we are. But I do think it's important here to just make sure that in your landlord waiver, you have good contact information, because I definitely see a disconnect between the address that a lender will put in the termination or the default notice with the landlord and it actually getting to the right department at the bank. So if we're on day 9 when the right department at the bank gets the notice and calls me, we've already, kind of lost a lot of the time that we would need. So it's one of those things that, if there's a notice section in a landlord waiver, it might be good to put not only a mailing address, but like an email or or something where they can get the notice to the bank, the right person at the bank, even earlier, right? The more time we have to work with, the better off we definitely are.
To piggyback off of that from a lender perspective too, I've seen some leases and landlord waivers come through that the contact information for the landlord is handwritten. You want to ensure that you're reading that carefully and that you confirm with your borrower, with the landlord, whomever you're having that dialogue with, that you actually are reading that information correctly. I've struggled in the past to communicate and deliver that notice to the landlord because I've mistook an I for a T or something else. And so you definitely want to keep an eye on those things as a lender as well, not just ensuring that they have your information, but that you have theirs.
Yeah. That totally great point, Rachel. Okay.
And can I ask a question now too?
Yeah, sure.
Along that, because I know you're going to get into kind of the selling part. So I want to focus a little bit on the negotiation pieces that you just talked about. From a sales perspective, I've heard it often. Well, if you take too long to negotiate this, the buyer's going to lose the space, or they could walk away from this deal. What is there a rule of thumb that you would say? Because my experience obviously has been primarily on the liquidation side, and my view is if a landlord is uncooperative at the beginning, they're going to be even much harder to work with when their tenant is not making payments and they could possibly have lawsuits and such. So what would you kind of say to the origination team, to the salespeople, to brokers that are really out there trying to run these deals and get those SBA loans on the books? Where would that fine line be of when you kind of stop that negotiation process, or you say, yeah, never mind, we recommend you find another space? Can you talk about that a little bit?
Yeah, so I think that if they're difficult at the beginning, they're likely not going to be more like easy to deal with at a later point in time. So I think that that gives you a little bit of an insight into what you might be dealing with right down the road. You never know though. But I do think, again, I think that this is one of those areas where I think it probably depends on your deal. And I think I hate to say like it's like deal dependent, but this is another situation where if we're talking about tables and chairs in a restaurant, right? Typically across the board, when we go to liquidate restaurant equipment, it's just not worth a lot of money. Or in most cases, there's some cases where there's some places where you're just have a tendency to end up having to abandon equipment because it's just not worth enough. And in that particular case, if the landlord's super difficult, or if they're just like, we're not going to agree to certain terms in a landlord waiver, am I going to be as concerned about it? Probably not, right? That's probably one where I would say, okay, we're still comfortable. Let's just get the deal done, right? However, you end up having to negotiate. Or that might be a case where just office furniture and they refuse to sign the landlord waiver, fine, right? That's where you might just write it up and say, we couldn't get it, we couldn't agree with the landlord, but we're going to waive it in this particular case. But in the case of like that company, the marble company, or these are companies where you have expensive equipment that might be worth something that will take longer to kind of remove or to get out, I think that those are worth really being thoughtful about, what happens, right? And I've actually had some issues where we talked about the SOP where it says the length of the lease should be the length of the term of the loan. And I've had lenders who have done that, but at some point throughout the term of the loan, they've extended out the maturity date, right? Because like COVID
Yeah.
has happened or something has happened. So now the loan ends up being longer than the leased location or the lease for the space. And I had one landlord who just refused to extend out the lease and kick them out. And in that particular case, it was a brewery. Well, we can't just pick up the equipment and move it. So we were out of luck in that particular case. So I think it's, some of the things to think about whenever you're extending out loans or negotiating landlord waivers at the front end is what kind of equipment you have in the space.
Right. Thank you.
How often has this happened where you send in the universal purchase package and you haven't gotten you've waived the landlord waiver or you can't get in? How often does that impact the guarantee?
So in my experience, it's only going to impact the guarantee where it caused an actual harm, right? So like let's say you waived the landlord waiver and the equipment you have a
Or
liquidation
something?
appraisal, right? It was like $100,000 and you couldn't get it because you didn't have this landlord waiver and you couldn't get the landlord on board. Well, then you have a definitive damages, right? Like,
Yeah.
but in the case where it's, office equipment and you weren't able to get it out, it probably
That's
doesn't.
worth 5,000 now.
Yeah.
Yeah, yeah, yeah. Okay,
That's
thanks.
why I think it's so important to look at the equipment for the particular deal and deciding what you're going to do.
Okay.
Um, One of the other provisions I like to just have lenders keep in mind is what we're going to do to sell the stuff, right? A lot of landlords don't want equipment sold at their location and they'll put it right in the landlord waiver, like no sales may occur at the lease location. Other times landlords will be cooperative and allow sales to occur at the lease location, right? I kind of see 50-50 on that. So it's just something to keep in mind. I don't think that one's a make or break, but if it's big equipment and you're going to have to move it, right? Like our brewery equipment was very difficult to sell from a different location. So that's just something to consider. And then just a few other, provisions that come up from time to time is insurance coverages, right? It's something you don't necessarily think about, but usually if I have a lender who now needs to send people into this space to sell and or remove things, there are some landlords that want liability insurance in place. Now your borrower is likely not paying, right? Doesn't have insurance at the time because they're in default on their loan. So the landlord says, well, lender, it's you, right? So I am going to look to my lender to add some rider to their typical insurance policies for this particular location. But it's something that you might want to keep in mind because I've actually seen like specific dollar amounts of insurance required in landlord waivers. Like I saw a landlord waiver that required like liability damages or liability insurance in the amount of $2 million. So that's something to think about, right? Again, because you're just going to have to understand what that expense is going to be if you actually have to put that insurance into place. And then this one comes up very frequently for me. Who's going to pay for the damages, okay, to the space once you sell and remove the equipment? Now, it is customary, the landlord is going to have the lender pay, right? And that's typical across the board. If the lender's agents are coming in to sell the equipment and remove it, the landlord's going to expect the lender to pay and repair any damages. But it's worth putting thought into how that process is going to work, right? Like there's sometimes where it just says the lender's going to pay the landlord whatever it takes to repair the damages. Whose contractor is getting used? Like, is it the landlord's contractor? Does the bank have a right to get their own, quote for repairs and pay their own person to do it? So something to consider, right? Because if the landlord's using their person and you say, yeah, that's what your provisions say, you're going to pay them, it might be a little bit more expensive than if you had the right to use your own person. So I don't think there's a right way or wrong way, but that's just something to keep in mind. And then the final issue that I think is worth putting some thought into is who cleans up the mess at the end of this, right? So every time that I've had the lender come in and have to start paying rent for the space so they have time to sell the property and get it out, it never fails that the landlord calls me up and says, there's all this stuff that you've left in the property. When are you getting it out? And I'm like, I'm not getting it out. Doesn't say I have to get it out. That's your problem, not mine. We're abandoning our interest in anything else that's left. That can become a problem, right? That can become an issue with the landlord. It's one of those things that comes after we usually have used up all the access that we need and taken everything out that we want. So we have a little bit more leverage in that particular circumstance, right? To say, no, I'm not doing anything else. But if you can negotiate some provision in there that makes sense, right, up front, then that might not be a question you have to try to fight about later. So something to just keep in mind. Okay, so the reason why I'm bringing this up is because I kind of want to talk about a few examples while we have a couple more minutes of things that I've seen or issues that have come up. And Rachel, if you have ones that you want to jump in on too, like that you've seen, I'm happy to have your input on this too. But I wanted to bring up this particular provision on a situation I dealt with. This actually happened with a landlord. And these were the provisions in my signed landlord waiver, right? So if you read this particular landlord waiver, it says, in the event that lender for any reason has the right to take possession of the collateral or the right to sell, landlord and borrower each grant to lender the right to enter the property for the purpose of removing the collateral from the property. Okay, so it says removing the collateral from the property. And then in the next section, it says if the landlord enters the property and removes, or if the lender enters the property and removes the collateral, lender agrees, lender will not remove any collateral in such way that results in damages. Okay, the reason why I brought up this particular section is because I got a hold of the attorney for this particular landlord. And I did my usual spiel, right? We need access, we're the lender, we have a UCC filing, we have a security agreement, here's our landlord waiver. I want to get in, we're going to get our people in to do the appraisal. And the landlord's attorney said, no, you're not getting your people in to do an appraisal. It doesn't say you have a right to do an appraisal. It says you have the right to remove the collateral. So either you're going to have access to remove the collateral or you're not. Okay, now this is one of those provisions that when you read through this landlord waiver, you're like, oh, I'm covered, right? Why would you ever think that the landlord's attorney would be like, no, you don't have any right to have access to appraise the collateral? But if you're reading this word for word and exactly as it's written, it doesn't allow us. It doesn't allow us the opportunity to actually access the property to inspect or appraise the collateral. So this is one where I then had to fight with the landlord's attorney over whether or not I actually had a right to appraise the collateral. So this is something that I don't think, like, I think most lenders, you would look at this, you'd be like, I'm covered, I'm good, right? But you might not be good in this particular situation. So whenever I'm going to negotiate a landlord waiver, one of the things I put in the template, like if I do it for a client, is in these particular sections, I don't say if we have to enter just to remove. I actually put, we have the right to enter to inspect, appraise, and or remove the collateral. So I want to have all three as an option, because then there's no question the landlord can't stop us if they sign that agreement. So does that make sense?
Does, absolutely.
Yeah. So that's one of those things that was definitely unexpected, right? But it not totally, I shouldn't be surprised, because what it says is what it says. So it's something to keep in mind. The other thing that I think happens not frequently, but enough, is I've had situations where we've negotiated with a landlord to have things sold, right? So I can think off the top of my head, it was like an indoor go-kart track. And we actually negotiated with the landlord. My client paid per diem rent, and we sold all of the items in place through an auction company. And the way that the auction company was running this particular auction is everyone would bid on the assets. Whoever was the winner then had 2 days to come with their own U-Haul and their own people to remove the items. Now that can vary, right? Like, depends on what your equipment is, if you need a rigger to remove it or things like that. But like in this particular case, it was like these go-karts and things like that. And the purchaser, the high bidder for whatever particular asset was, had to come bring their own truck and have their people go in and load the stuff. Okay, so I want to say there were 2 or 3 days where we were going to be doing this, and on the first day, the landlord was upset about something that happened and locked us out. So now we have like 15 purchasers with moving trucks driving to this particular state because they weren't exactly close, and now having to sit in the parking lot waiting for us to find some resolution with the landlord, right? So it was a lot of
What happened?
it was a lot of frantic emails and a lot of frantic calls with
Oh,
me trying
yeah.
to like appease about 15 different people with moving trucks who were paying people by the day or by the hour to get this stuff out. So we did,
Oh.
in that particular case, have to pay the landlord some additional money to get access again, because we were kind of stuck, right? So there's definitely challenges that come with working with landlords. And then another situation, it was a gym, right? And kind of similar, where we sold a third party the gym equipment, because gym equipment seems to be something you can sell relatively easily, right? The ironic part of it is the landlord locked us out after the first day of removing equipment because they claimed that the floor in the gym was being damaged by the people that were removing the equipment. The bank had actually financed the floor that was in the gym that was now being damaged, that the landlord locked us out for. So I found that one a little bit ironic, because I was like, literally, the bank financed the floor that you're complaining is being damaged. So we also had to end up kind of working with the people that were the auction company and the people that were going in to try to like work through what made the landlord comfortable, right? And ideally, there has to be hopefully a place where we can meet in the middle with these landlords and try to find a way of working things out. If you can't, though, you can sue the landlord, right? Like, if your borrower's taken off and your landlord has taken possession of the space and they won't give you access, and you have a landlord waiver that says you're entitled to access, you can file a lawsuit against the landlord if you need to. It's just, it gets expensive. So that's why it's, some of this that I'm talking about is really preventative, but in some cases your landlord's still going to be difficult, then you might have to sue them. But most of the time, if you have a signed landlord waiver that has the right provisions in it, the landlords will generally kind of work with you, hopefully, and abide by the terms of the landlord waiver. Do you
So
guys have
Lyndsay,
yeah.
I got a live question for you. It's a bit different than what you were just talking about, but this was, do you have any thoughts or general issues that you see with EPC OC leases?
So EPC OC leases, I don't think are as big of an issue, because usually your borrower is not paying the loan, so you're going to end up foreclosing on the real estate anyways. So you're going to end up taking possession of the real estate at some point in time, or they're going to sell it. So, you know, do I see as many issues with them? No. I can sometimes from time to time use an EPC OC lease to leverage the borrowers ahead of the foreclosure, but I kind of view that almost a little bit separate from this particular issue. Any other questions?
What else you got, David?
That's all we got in the QA. I do have one, but it's a bit more of a it depends. I already know ahead of time asking that question, but you know, where this really comes into play is how much time do you spend? And I think Rachel hinted at this, trying to do this on the front end, because there is a cost benefit that you're running into it, that as a lender, you're not going to, I mean, if you have a $75,000 loan request that you're working on that clearly falls within the space that you need to do that, realistically, how much time do you spend on this? When there might be, I mean, not every lender is going to spend the same length of time. And what you don't want to be is at a disadvantage, because you're trying your very best to follow all of the requirements, but you're just giving up opportunities, or worse, you're spending so much time you can't possibly make it work from a internal perspective. So like, I don't know, just what are your thoughts on that?
Yeah, I definitely think you're right. It depends, but I think you sort of have to weigh, right? Because I think that, you know, when you have a smaller loan and you don't want to disadvantage the lender because you're putting so many requirements on it. But I do think that there's so many times where I'm having a conversation with the lender and we say, in hindsight, we should have done this, right? Or there's times where they are actively negotiating a landlord waiver with a landlord. And sometimes I don't think that people put enough thought into what will happen down the road, right? So it's just something to keep in mind if you are open and you're having those negotiation with a landlord. There are definitely times where I'll work with the closing attorneys in our firm, where they will say, the landlord wants to change this, or the landlord wants to do this. What does that impact, you know, if we have to go through a workout? So it might even just be spending just a minute thinking about it. There's not always going to be a time where you can get every single thing that you want, but it's definitely one of those that if you can get a little bit more, it might be beneficial in the long run. So if you have the opportunity, it might be worth trying to like negotiate that particular provision. Anything else?
Nothing
Lyndsay, this has
pending at the
been very
moment.
good. I have a question for the three of you. Since emerging risk is the hot button, and our business and Starfield and Smith business has gone up as it relates to servicing and liquidations, what are some other hot topics that you think some of these folks would want to hear? I'll put you guys on the spot.
I mean, immediately what comes to my mind is, you know, blanket UCCs. Those sound good in theory, but when it's a blanket and going back to a liquidation scenario or a distressed borrower who kind of foresees that this is going to become a problem, I'm going to do everything that I can to salvage. If you're selling privately and the buyer doesn't have a skilled attorney, or this is kind of a handshake deal, they're not going to do a lien search. They're not going to see that you have a blanket lien on it. And because it's not a PMSI with, you know, real tangible serial numbers on equipment that you can chase after, you could go into the space and your collateral's gone, and it's of no like negligence to the borrower or the lender, other than the borrower, you know, making that sale without contacting the lender. But the lender has done everything they can up to that point to preserve their collateral, right? They've done their annual reviews, their property inspections, done all of those things, kept up their insurance, and it's just one of those unfortunate circumstances. So I think, you know, that's something that I've seen a lot over the years. I'd love to touch on that at some point, and really what the SBA's view is in that type of scenario.
Awesome. How about you, Lyndsay? Anything else you'd like to go over at another time and date?
Yeah, so I think that, you know, I've been really focusing a lot on preventative measures at this point in time, because we are a couple years into seeing increased loan defaults. So I've been spending a lot of time, and I think lenders should be, you know, spending some time just kind of looking at preventative measures like periodic site visits to make sure their borrower is still at the same location that they said they were, if a borrower moves, getting an updated landlord waiver, making sure borrowers aren't changing their names or getting new UCCs filed when they do change their names. So just some of those things that, I think can benefit a lender in a long run.
Active servicing.
Yeah.
Yeah. Okay, good. David, how about you? Anything else on a future date that you think would be worthwhile to these folks?
Well, I think it's how can we better in the industry as it is right now. There's a whole lot of ways that various pieces of tech make this move faster, right? And so there's a balancing out of how do we materially show that lenders can meet all the requirements, even to the letter, as much as the spirit that SBA set forth, while at the same time not disadvantaging the borrower, because in many cases the applicant needs the money and there are faster ways to get money, and a lot of times they don't appreciate the fact that there's much greater harm to them. And it's not that SBA needs to be the fastest, but the reality is it's a much better partner with a small business than most of the other alternatives out there. So how do we better present that? How do we make sure we're bringing things in a timely manner so that business applicants are able to get access to that capital when they need it? Versus turning to these alternatives that ultimately hurt them in the long run.
Yeah.
Perfect. Well, thank you all for this. Everyone will get a copy of the PowerPoint and this recording, and then I hope you'll join us July 24th when we have Stephen Hayes, our founder of Lumos Data Analytics, who works with Lenders Cooperative now. So thanks all.
Thank you.
Thanks, everyone.